Microsoft confirming it plans to cut 10,000 employees, which is about 5% of its workforce this year, as the entire tech industry deals with a continued slowdown. DA Davidson technology strategist Gil Luria joins us now. Gil, help us put this in context here. 5% of the workforce at the same time when we know that there are a lot of tech companies that have been guilty perhaps of overhiring, but put this kind of in perspective with regard to what this signals about Microsoft's future ambitions as well.
Well, for Microsoft specifically, this is a tactical move to realign resources from the businesses that aren't growing and they don't expect to grow over the next couple of years to places where they do expect growth. And specifically, there's a big investment being made right now in AI, in OpenAI, the company that they're seeing really good results from ChatGPT. But they do need to divest from some of the businesses that are just not going to show a lot of growth over the next couple of years.
And Gil, I'm just wondering, I know some of these tech workers personally who've been laid off and then hired at a different firm. And usually, at least in the limited sample space I'm looking at, it doesn't take that long. I'm just wondering if there are any stats of whether these hires, well, I guess these layoffs persist and we have a pool of talent that suddenly is trying to clamor for a job and can't find it.
Well, I think we've had a deficit, especially of technical workers, of coders in the industry for the last several years. And so as people are getting laid off, they're very easy for them to find new job, get absorbed. And I don't think that's going to change for a while. The demand for programmers, for coders is so substantial that that's not going to change anytime in the near future. Longer term, I'd go back to the conversation about generative AI and think about how much of that capacity for coders can be filled by generative AI. But for the next year or two, I'd expect a lot of these layoffs to happen and for those people to be absorbed at other places where there is growth, where they do need more technical talent.
Gil, our team has been boots and parka on the ground in Davos as the World Economic Forum is taking place. And they got a reaction from Ian Bremmer of Eurasia talking about tech CEOs and saying that they're ruining American democracy. I want to play the clip and get your response on the other side.
That's Elon Musk, that's Jeff Bezos, that's Mark Zuckerberg, it's all these people. But the fact is that those people worth hundreds of billions of dollars also, at the same time, have literally no interest or conception in their role as stewards for civil society and American democracy. That is the different sides of the absolute same coin. And all of America's lionizing free markets and capitalism has also led to a vastly more dysfunctional democratic process because these companies are inadvertently, but nonetheless, aligning with business models that destroy democracy.
Gil, you cover many of these companies. What would you say in response to the statements that you just heard from Bremmer?
The CEOs and management teams that we deal with are very concerned with adding shareholder value. They try to stay away from politics and the topics around politics as much as they can. Now, Mr. Bremmer mentioned some of the top billionaires and founders of these firms, and they have their own political views and they're exercising in the way they want. But most of the companies we cover, including the biggest ones, are really just focused on shareholder returns and making sure that their business grows in an ethical, profitable manner. So I think that's probably, there's a couple of people that Mr. Bremmer mentioned that should be a concern. It's not a concern about the companies themselves and not the stocks either.
Okay, so I guess this raises more of a kind of existential equity market question then. And should the value or that fiduciary duty to shareholders outweigh kind of the ethical and civic responsibilities that technology companies and their products and services have?
We do have expectations from these companies to act ethically, and their shareholders have that expectation from them as well. That's one of the things we've seen from the growth of the ESG movement, is that the expectation is for these stewards of capital to manage and balance what they're doing for their shareholders with what they're doing towards their stakeholders. So that's definitely on their mind. But again, I go back to the fact that the companies we interact with and cover are doing just that. And they have a very strong commitment to their stakeholders and to their employees. Many of these companies that we're talking about are some of the highest ranked companies in terms of best places to work. And the reason is they do take care of their stakeholders and they do take care of their employees.
Gil, before we go here, I want to direct your attention to the Wi-Fi Interactive. Just want to broaden the picture out. Compare software to chip stocks. Now, this takes a benchmark, and you can use any one here. The iShares Software ETF, IGV, over the last year versus the iShares Semi ETF, Semiconductors ETF, SOX. And you can see they're both down about 23%. But when you take a look at the 3-month returns, SOX here is up 27%. And I remember last November, December, those chip stocks were really getting beaten down. What do you think is causing the turnaround here for chip stocks just first before software?
Well, chips and chip stocks have always been trading stocks. They live by their own cycle, which makes it very lucrative to figure out what the cycle is and call the top and bottom on it. They don't really add that much value over time. I'll contrast that with software companies. Software companies are one of the main drivers of productivity in the economy. They add value over time. Their underperformance over the last year or two has been spectacular from very high levels as interest rates have gone up and discount rates have gone up. But over time, these are the companies that add value. And over time, we expect them to far outperform other parts of the technology ecosystem and the economy, specifically chip stocks. But chip stocks will outperform during their cycle and then underperform during the other end of their cycle.
Well, I appreciate your being candid here and honest. Thank you, Gil Luria, D.A. Davidson Technology Strategist.